Hey folks, this is Tom Nash. As you can see, I'm on the road, but I didn't want to skip this video because I know a lot of you are waiting for updates in this very chaotic market right now. So I want to jump on here for a few minutes and kind of give you the rundown of everything that's going on. In today's video, we're going to talk about the recent warning from Bank of America, some updates from Morgan Stanley, and Tom Lee's coming out with a new prediction that I think we should talk about. But mainly, I'm here to kind of help you to navigate this extremely chaotic and turbulent market. Basically, what to do in this current tariff drama. I mean, what we've seen in the past few days was basically a huge roller coaster. I kind of want to give you a roadmap on how to navigate this. But first of all, a huge shout out to our Patreon community. Just yesterday, we celebrated 17,000 members on our Patreon. 24 hours later, we're at 18,000 members on our Patreon page. We have the best community in finance for sure. It's been a pleasure. It's been a blast. I mean, I'm beyond words. Thank you guys so much. It wouldn't be possible without you. And I'm really excited to see what's next. Now, moving on from that, let's talk about what's going on right now with the market. I obviously want to start with the warning from Bank of America. So Bank of America is coming out with a very interesting prediction and really kind of surprising. So this is Mr. Hartnett. Hartnett is, his name is Michael Hartnett. He's actually the chief investment strategist of Bank of America. And what he's predicting is very interesting. He's saying, look, folks, you should short the S&P 500. And I think it's a very interesting prediction. We have to talk about it. Basically, if you read this whole article, which I'm not going to do here because I don't want to waste your time, kind of the TLDR here is that U.S. global exceptionalism, essentially the U.S. lead in the world is coming to an end. The U.S. is falling off. So that's why the S&P 500 is going to follow, and you should basically bet against the S&P 500. So let's talk about it for a minute, then we're going to get to Tom Lee and Morgan Stanley and my roadmap. So I have my little notebook right here and I have everything written down. So let's start with Mr. Hartnett. So Bank of America is saying, look, folks, right now, long run revenue growth is going to decline because the United States is going to decline, and that's why the S&P 500 is going to decline. Now, look, in my opinion, and this is just me, a guy on the internet, in the past 100 years, nothing has really changed. What we've seen is crises come and go, recessions, we've seen a depression, we've seen World War II, we've seen many conflicts, a lot of problems. We saw Paul Volcker basically bail out the U.S. economy in the 80s, and so much crap happened over the past 50, 80, 100 years. In the long run, we have never seen U.S. revenues not grow long term, and we have never seen the S&P 500 not go up long term. Yes, we had a little bit of exceptions. For example, the lost decade between 2000 and 2010. That's one example. But over the long haul, I mean, the market has never really declined, and the United States leadership has never really declined, even though predictions about said decline were made, left and right. People kept predicting to this day that the U.S. is collapsing, that the U.S. dollar is losing its dominance, etc., etc. They've said the same thing about the Ukraine war. Now they're saying it about the Trump tariffs. Every time there's a little bit of a scare, these people tend to come out of their holes and claim that the United States is finished. I wouldn't bet against the U.S. In my opinion, short term, there's no way to know what the market's going to do. I mean, the market can swing, especially this market, violently. Nobody knows where the market can go short term. I think shorting the market or betting against the market, whatever you call it, it's a very high reward strategy if you get it right, for sure. That's definitely high reward. But the amount of risk here is insane. So it's a very high reward, very high risk. In fact, when you short, there's almost no downside to this. And it's very scary. And I don't think any retail investor should engage in shorting anyways. In my opinion, this is even worse than casino, because in the casino, you're gambling and it's a pure game of chance, which short term, what they're talking about is the same thing. But in the casino, you cannot lose more than you invested. I mean, shorting against the market, you can actually lose way more than your original investment. So I'm not a huge fan of retail investors using shorting at all in general, especially not short-term predictions like this. I think the markets can stay rational a lot longer than you could say solvent, so I wouldn't go and gambling with the stock market. In my opinion, it's very, very simple. And again, I always say in my opinion because I don't want you to think it's God's honest truth because Tom said it. I'm just a guy with an opinion. And you know what they say, opinions are like a-holes. Everybody's got one. I look at the past 80 years. The average duration of a bull market in America is 5 years. The average duration of a recession is about 10 months. Over the past 15 years, despite everything that happened in the world, everything that happened in America, the S&P 500 is up 700%. And over the past 100 years, 10% annually, that's what that S&P 500 is going to give you. And now we're faced with the huge AI, artificial intelligence megatrend that's only heating up. Nobody's talking about that anymore because now tariffs is the new drama. But I mean, in general, I mean, it's very, very hard to ignore what AI is going to do to the world. We're not even in the beginning of humanoid robotics. That's going to be another huge catalyst. So to bet against the US market where the best companies are, the best technology is, I think it's a little bit misguided. But hey, what do I know? I'm just a guy on the internet. But then again, I've gotten a lot of things right. I also got a lot of things wrong. But I think in this case, betting against America and the US economy, ouch. So let's talk about Morgan Stanley. So Morgan Stanley is now saying something I actually do agree with. They're coming out and they're saying, look, expect the unexpected. You're going to be fooled a lot more, a lot more. I actually agree with this. It's pretty much to the point where I almost would say, thank you, Captain Obvious. I mean, we've seen it over the past week. You're going to be fooled a lot. You have tariffs, then there's exemptions, then you have tariffs back again, there's more exemptions. Every few days, it completely flips. I think nothing is sacred for this administration. Nothing is permanent for this administration. Chaos is Trump. Trump is chaos. Policy isn't going to be rolled out cautiously and slowly. It's all going to be with a sledgehammer. I think this just stresses out and kind of emphasizes the importance of long-term strategic dollar cost averaging, especially in turbulent times like this. Volatile, turbulent times like this are a huge proof of why consistent dollar cost averaging with 2x on the downtrend is a lot better strategy than anything else. It also has zero stress and zero anxiety and no timing the market. I think there's a lot more possibility for huge drops in the market. This chaos is definitely not over. One day you might wake up and the S&P is going to be down 30%, 40%. Maybe Palantir will be down 70, 80%. Definitely in the realm of possibilities. So instead of predicting this, I would just say prepare for this and make sure that you have the right mindset and the right kind of head in the game in order to kind of predict what you can control. Now, you cannot control the market, so there's no point in predicting the market, but you can control your own psyche, your own emotions, your financial situation, if you can actually deploy capital, etc., etc. So predict yourself. Don't predict the market, okay? Now moving on to Mr. Tom Lee. So Tom Lee is coming out with a very interesting prediction. And a lot of people kind of have a lot of feelings about Tom Lee. Some people love him, some people hate him, some people are disillusioned by him. People looking to collect child support from this man after he had a few bad calls. But Tom Lee is coming out and saying, look, a lot of opportunities emerging in this market right now. This chaos is going to be very, very beneficial to a lot of people who could be buying the dip, et cetera, et cetera, et cetera. Now, to his credit, Tom Lee actually said when we were at 4,900 on the S&P that the market is going to bounce back to 5,500, which it did. We're at 5,400, but it's close enough. And of course, people forget that because he's been embroiled in a lot of controversy lately because of all the wrong calls he had recently. But this is actually a very good call that he made that doesn't get enough credit. But I mean, it's okay. It's very sensitive times for people. I get it, right? I still like to listen to Tom Lee. I don't blindly follow him, and I don't always agree with what he says, but I like to listen to it because I think he makes very interesting arguments. So this time he's saying, look, the market is getting desensitized to the tariff drama. So it's basically the boy who cried wolf, but the stock market version. So essentially, this craziness, eventually the market is going to start ignoring it because you can't stay vigilant and alert and dramatic for a long period of time. Actually, it's true. He says it's a good opportunity to buy stocks. I think it's always a good opportunity to buy great stocks. So I wouldn't particularly say that this is a good opportunity. I think, like Peter Lynch said, it's never a bad time to buy good stocks. His prediction for year end for the S&P 500 is 6,600. We're currently at 5,400. That means that Tom Lee says that by the end of the year, we're going to do another 22% on the S&P 500. That would mean we'll have a massive rally year in 2025, according to Tom Lee. And he's basically saying that it's going to happen because inflation is dropping, and it's dropping for the right reasons. Shelter is dropping, which is not tariff related, and that is going to be the main catalyst. and also you have the Fed, et cetera, dropping rates. And I do agree with him when he says that the U.S. dominance isn't far from over. Tom Lee basically makes this argument: the best companies in America, the best technologies in America, 40% of the S&P 500 returns every 10 years come from new companies. So that's pretty much, it just shows you that whenever you have companies kind of die out, there's always new companies to replace them, new blood, next man up sort of mentality. The U.S. market is undefeated. I agree with him. I think his 49 to 5,500 call just a couple days ago, or was absolutely outrageous, but he did get it right. So I wouldn't bet against him so quickly. I think the man is not chasing hype. I think he's talking about fundamentals. He's saying, look, the VIX is above 50. 15% of stocks are, below the 200-day average, and that's usually a buy the dip moment. Whether you agree or disagree with that statement, it's a logical statement. It's not hype. He's basically saying, hey, that's my opinion, that's my rationale. You can agree or disagree. And he's saying, look, I think inflation is coming down, not because he's hoping for it, because say, look, shelter is down. That's not going to be tariff related. So you got to make a decision here, whether you agree with his analysis or not. Whether you agree with his dollar analysis, the U.S. dominance analysis, he's making a rational logic argument, and you have to be the thinking person and think if you agree or not. Is he 100% right about this? I don't know. Nobody knows. I would just say stick to the plan and keep to your guns. Make sure you trust the process and don't lose your head over volatility. That's it. That's all I got for you today. Stay cool, stay collected. Don't do anything I wouldn't do. I gotta look out for Grandpa. Of course, if you haven't yet, a good time to join the Patreon, patreon.com/DomNash. 18,000 members, absolutely insane. Insane that we are celebrating this milestone just 24 hours after we celebrated 17,000. Absolutely wild. I can't say enough thank you for all of you for making this possible. Really, really appreciate it. And if you stuck with us for the past 3 years, I think it was quite beneficial for you. A lot of people in time of panic like to get out of these groups and education. I think you should invest more in education and more in yourself when times get volatile. And, if you choose to join, I would see you there quite soon. Thank you so much. Peace.